Joining me now is Peter Krauth. He is the author of The Great Silver Bull. He's holding it here. And there it is, shameless plug, just like that.
Voila.
All right, very good. Why not? Why not?
Exactly.
You took the time to write it, and here we are. All right, so just as an aside, like I was really following silver closely 2010, 2011 when it had that run. And then going way back, I read about the Hunt brothers trying to corner the market. So it's a fascinating metal to follow, obviously, and that's why you write about it. So I'm just curious. So it had that run to about 50.
Right.
Then it was in a range for years, 15 to 30, call it. Now it's around, I haven't looked today, 20 or lately 24 or 25. So why now? Why is now the time investors should really think seriously about silver?
Right. So, I mean, especially right now, if you look at what happened in 2022, I mean, I would arguably go back several years, but just recent numbers that we got for the full year 2022 show us that there was a significant deficit in supply in silver. We're talking about almost 200 million ounce supply out of a 1.2 billion ounce market. So that's about 16%, 18%. And the Silver Institute estimates that we're going to have significant supply deficits for years to come. And I was looking actually at a chart of put out by BMO in 2018 that showed their forecasts for deficits. So they saw deficits starting in about 21, 22, back in 2018. And they thought 2021, 2022, we're going to see about a 30 or 40 million ounce deficit. And here we are at 200 million ounce deficit. And they were actually forecasting 200 million ounces out in 2030. So that demand has, for some reason, which we can get into, but has been pulled forward by nearly 8 years.
In terms of numbers, you think that silver can eventually get to, say, $300 over time. And we were talking earlier about how there can be a lot of hyperbole in the gold and silver market. Bitcoin, for example, everybody's putting these fantastical numbers on these metals. So how do you get to 300?
So I actually get to 300 more than one way, and it's interesting for me that when I did the research, I looked at different indicators and prior indicators, and when I used estimates, of course, with these different indicators, they were all pointing to somewhere in the $300 range. And so one of the sort of best known ones is the gold-silver ratio, which back in 1980 when silver hit $50, had reached down to 15. So right now the gold-silver ratio, which really tells you the price, the number of silver ounces it takes to buy one gold ounce, is close to 80. And when the ratio falls from a level above 80 and it comes down through 80 and keeps falling, that to explain means that you need fewer and fewer silver ounces to buy a gold ounce. And when it falls, both metals typically are rising or in a rising market. So right now we're somewhere near 80. It's been falling. It actually peaked at an all-time high of 125 when silver hit $30 in August of 2020. And so it's been falling since then, and I believe that's going to continue. And if my estimate for, let's say, an ultimate high in gold, and I feel relatively conservatively, would be, say, $5,000. We're at almost $2,000, so I don't feel that's unachievable anymore. But say $5,000 gold, and if you take the ratio of 1980 of gold to silver, when silver peaked at $50, the ratio bottomed at 15. And a 15 bottom with a $5,000 gold level gets you $333 silver.
And you say 5 to 10 years from now,
right?
Potentially.
Exactly.
Okay.
And I also, I'm ready to admit that this could happen in some kind of a speculative mania. It's not like it's going to 300 and it's going to stay there. So we had this bubble in gold in 1980 and in silver, and I could certainly see something like that happening again. And it's in that kind of context that I could see a $300 level.
And Peter, in terms of investors, if they want to get in or if they want to augment what they already own in silver,
right.
Is it the physical metal? Is it the Pan Americans of the world? Discovery plays, ETFs, combination of all of them?
So yes.
Yeah. Yes.
It is. The answer is yes. So yes, I'm a proponent of the entire space. And what I do say though is that one of the first things you need to consider is that silver is volatile. It's absolutely a very volatile metal. Its price can jump and can fall quite quickly. But you have the entire range of everything from physical to ETFs to large producers and royalty companies. Then you have developers, and you have junior companies, and you even have some relatively junior producers. So you have all kinds of mixes within that spectrum. And so I write a newsletter called Silver Stock Investor. It's at silverstockinvestor.com. And I cover the entire space. It's actually the only newsletter that, at least that I know of, that is focused exclusively on silver. And I cover that whole range, and I'm a proponent of owning some physical silver. And if people are slowly getting into the space, or they're not as comfortable with the higher risk and higher volatility of the juniors, for example, they'll get fantastic exposure to silver just with physical and perhaps some of the large producers and royalty companies. And I can give a couple of examples. Between 2001 and 2008, Pan American Silver did almost 16 times return. And between 2008 and 2011, Wheaton Precious Metals did 17 times return. So these are some of the largest capitalization silver companies out there. And within a matter of years, they can multiply your money 10 times, 15 times, 18 times. It's really a space that I think people should be involved in. And they can mitigate the risk by saying, okay, perhaps this is in some cases a bit of a moonshot, especially with juniors. But again, I'm talking about some multi-billion-dollar market cap companies that when the silver prices rise, they absolutely ride that wave, and it makes sense to have exposure.
All right, great stuff, Peter.
My pleasure.
Show your book again.
Voila.
All right, Peter Krauth, The Great Silver Bull. Thanks a lot.
My pleasure.
Okay, thanks for watching. We'll see you next time.